So I'm just going to go through a couple trades this week. One of them I didn't manage to take by like 1 pip, unfortunately. It would have been a fucking crazy one. But I'll go through
You
this.
didn't listen to me, did you?
Bruv, shut up. It was still a free signal I gave you. But anyway, let's go through this trade on Thursday. By the way, if anyone has any questions, just type it out and Luke will read it out because he's good at reading. But anyway, so what we like to see here. This was on Thursday, obviously, and I use my 1 hour for my bias, and it's very simple. You find the most recent 1 hour break before session opens, which is this break right here, and then I'm looking at from the low to the high. I'm looking at my PD array to see I want to take trades because obviously this is bullish since we've seen this break here. I'm looking for a buy beneath the 0.5%. Drop down to the 15-minute. I'm looking here. I notice that this 15-minute order block here hasn't held, so after noticing this hasn't held and still being bullish, I'm looking for another point of interest. However, we can see that nothing in this zone is valid because it's been mitigated instantly. So because it's not valid, we're looking for the sweep of this, also knowing that this is our current protected low, because this is the low that caused the 1 hour break while being bullish. So with this being our protected low, we know that this should hold with the sweep of this. Considering this is an invalid order block, this protected low should not be broken through whatsoever if we're correct in the market being bullish. So
why is it protected? Like what? How is it protected?
because it's caused, for me it's protected low because it's caused this 1 hour break. Is the origin of this whole 1 hour break here, this whole leg there.
Okay.
So
but why would they protect it? Why would it not be like in there like?
Because if the bias is like, if I'm right saying this is all bullish, then there should be no reason that the market goes anywhere beneath this line. So it should be 100% guaranteed that it does not break it if my bias is right. Yeah.
Okay.
So
and we've also taken liquidity.
Yes, exactly.
So it makes sense for it to be protected. Yeah.
Yeah. So with this being our protected low and no valid 15-minute order block within here, then we're looking for the sweep before looking for a change of character, double break, whatever you want to call it. I have my different methods, but for me, I'm looking for 2 legs, which is 2 legs is just quite literally that, which break 2 pieces of structure before retracing, building up liquidity before shooting up, exactly like this model. So we've seen one high be put in here, followed by a low right here. So that's 1 leg for me, building up liquidity. 2 leg here, breaking structure. A 3rd leg, which is just even more confluence, and then it builds up liquidity to my point of interest down here. And my point of interest is not even going to bother. It's quite literally a 1 minute setup. Usually you'd want to go to the 5 minute and pick the order block in there, but with this being strictly just a small 1 minute setup, I'm looking to enter underneath this liquidity, either from this fair value gap or this order block here. But as we can see, it's quite hard to tell, but with this being the fair value gap here, you can see the wick taps in, this wick just taps in, so I could tell that we're going to use the SCOB, which is single candle order block. We're going to be using this as our point of interest to enter, and using my own entry confirmation, which is just based off reaction, hop straight in. And the reason that I was targeting here and not the high, because even though the 1 hour was bullish, and if I had more confidence, I would have instantly targeted up there, which would have taken it from a 1 to 8 to a 1 to 14. But the reason I didn't was quite simply because even though it was a nice break here, on the 4 hour it obviously doesn't look like much, but because it isn't that strong a break, you could say that the market was stalling up, so it could be like pending a retracement. And if it's pending a retracement, then I'd be looking for like sells to at least down here. So I was targeting that 15-minute order block because there was potential for sales in this situation. Yeah, that was the 1 to 8 on Thursday. Proof is on TikTok. Proof is probably in winning trades. Who knows? Also, alright, this one was on Friday. Did not manage to catch this, unfortunately, but I called it out fucking time beforehand. So, bullish from here. once again still bullish, and we're using our fib retracement from the swing low to the swing high, because like we were just looking for our entry, we're looking for that those two legs, which is shown here as well on the hourly, because obviously the market is fractal, so it works on any time frame. We're looking for the slight pullback before another break, before building up liquidity, before shooting back up, which is the same thing that happened in the entry on Thursday is now happening on the hourly. So using the 0.5, the 50% retracement, obviously we're looking for buys beneath this level, so we kind of had to anticipate the reversal in this one, which when I drop down to the 15 minute will be obvious. But looking at this here, this would be my order block, or you could drop down to the 15 minute, because this is the first point of interest beneath the 0.5%. It is already sorry, it's already mitigated here. However, due to the timing, I knew they would probably play around that level by the time the session closes. So knowing this is going to be our target, knowing that we're pending a retracement, because obviously we're not taking any buys above the 0.5, so we know that realistically we're going to have to take sales down to a point of interest. Looking here, 15 minute order block with liquidity resting here. We've had the break there, like it all just suited, perfect little 15 minute zone. Wait for tap in there, and then obviously we're looking for two legs here, which we've had one leg here, pull back, another leg, and then we're looking for our entry. And my entry was within this zone here, as usual. And yes, Luke, props to you, you were right, but GU doesn't work as well as EU and AU does with his entries. So this was a 5 minute order block here. It had 5 minute liquidity beneath. Should have entered on that, but I was trying to stick with my strategy. And obviously I always enter with a 2.5 pip stop loss, or anywhere between 2.5 and 3 pip stop loss. So instead of entering there, I was still waiting for it to retrace higher, which obviously it didn't, and it ran to 1 to 41, which I called this target literally the morning before and everything. So it was a very nice trade that I didn't catch, but yeah, that was a bit of a slower week for me, but still a nice one. But yeah, any questions? If anyone has any questions, just type it out, or you can unmute your mic and ask. Anyway,
Brother, I have a question.
yeah, go for it.
Are you familiar with the market maker buy models and sell models?
Not completely, no, but yes, I do know them vaguely.
Oh, okay, because you have quarterly theory set up here, and I see quarterly theory with connected with market maker models is fucking OP. Like, so I thought, but
yeah, no, I use parts of the market maker model, like just accumulation, distribution, redistribution, stuff like that. But that's not stuff I'm gonna go through on the free section.
Okay.
And plus, a lot of people here
For sure,
won't be
for sure.
quite like a lot
Familiar
of
with
people,
it. Yeah, makes sense.
precisely.
Mhm.
Yeah, how do you determine your stop loss? Because I've always put mine at high or low. So fuck it, I'll drop some free source. So for where'd my finger? I'll explain my stop loss for the ARR one, which I accidentally deleted. Alright.
Do you also use quarterly theory on higher time frames?
No, I only use it for confluence for sessions, 90-minute cycle. I think using on a higher time frame can overcomplicate, because you want to stick to daily bias, not monthly bias, not weekly bias. That's what I see is easier.
But if you're a swing trader, then that would be good, right?
If you're a swing trader, I'd use daily quarterly theory, as in like Monday, Tuesday, Wednesday, Thursday, like accumulation, distribution, all that shit.
Yeah. Okay. So the weekly framework.
Yeah,
Okay.
yeah. If you're swing trading, you can use this indicator as well, and you can stick on the daily one, which shows obviously Monday accumulation, Tuesday manipulation, like
Oh,
all that stuff.
Yeah, bro,
So,
I'm a swing trader, so
yeah, have a look at that.
I'll try to
It's a
use
very
that.
good indicator.
Sure.
But explaining how I actually get my entries with 2.5 pip, it's quite simple. It's actually very simple, but it's a bit risky. You might take a loss every now and then, but I seem to not be losing that much, so it works for me. I don't know about other pairs, but for GU, for me, knowing that this is the only point where I'd be looking at entering, if there's no reaction within this single candle order block here, if there's no reaction, then I know it's going to go through. And I know that if there is a reaction, like there was here, and I enter like this, that realistically, if I was completely right in my analysis, there should be no other reason for it to pull back deeper. If it already shows that initial reaction to continue in the direction I want it to see, then I can stick my stop loss directly beneath it, because if it comes back down and it retests back into the zone, then realistically it should carry on pushing through the zone. If that makes sense, it won't hold.
Lovely.
Because
Yeah,
I like
yeah.
to
Makes sense.
I like to get my zones very precise on the 1 minute. Like the same way that you could have looked at entering here, the same way that I explained that this simple little wick right here had mitigated, well, partially mitigated the fair value gap, told me that I need to enter down here. Very, very simple stuff like that. Like you really have to like properly analyze your actual entry zones on the 1 minute to be able to know when to enter off reaction. If that makes sense.
Yeah. And bro, like your risk, it's not even that much. So even if you lose it, if like
Nah, not
when
at
this
all.
trade doesn't get hit, the next trade you'll make so much more because
Exactly.
your risk to reward is amazing.
Literally 1% a day or unfunded 0.5. Literally depends. How do you enter so quick on the 1 minute time frame? I enter on my phone on my iPad. If I enter on my iPad on my phone, I'll literally just click on the button on MetaTrader while watching it on TradingView, or again on MetaTrader on my PC as well. Oh no, but lot size, because I always have a 2 pip stop loss, 2.5 pip stop loss. So on 200k funded, that's 25 lots. So I have 25 lots already ready to press buy every single time it's entering the zone and stuff like that. It never changes for me. It literally never ever changes unless I'm changing the lot size with according to the account size. What is considered a valid pullback? A valid pullback is quite literally just stalling to get back to your order block. So for example, this one, say the market, say we're like reiterating this model, say as we can see here, it's had a little pullback down, and then we see the break, which is right here. Once we see this break, if it just instantly comes back down, and that, like, we know that's not valid at all. However, if it builds up liquidity like so, and it's stalling to get down, and it's continuing just to have like minor pullbacks, like internal pullbacks, then you know it's going to continue up, because obviously liquidity drives the market. So if it's not building up liquidity and you don't have a valid order block, then it won't be, like, it just won't be valid in general. And the same way that if this candle here had come down and mitigated this zone here, I would have been looking at entering on the sweep down here. So you know, it could still be a valid pullback, but with invalid zones, then you're just looking for a sweep of the whole level to be able to enter then, if that makes sense. How to know what POI is valid if there's multiple simultaneous unmitigated? Well, on this one, for the example, you're looking for the first, well, for me, according to my strategy, I'm looking for the first unmitigated 15-minute point of interest, simply because the market doesn't want to, like, say the market's bearish here, which obviously it was, the market doesn't want to continue going up. It wants any excuse to go down and continue in the higher time frame direction. So knowing that it just wants to continue and has no reason to continue in the opposite direction, then you're looking for the very first valid point of interest, which has liquidity rest in, its broken structure, ticks all those boxes. When waiting for a reaction, do you wait for candle to close or just tap and retrace? Because sometimes it taps when I want to wait for the 1 minute to close. I don't always wait for the candle to close. Occasionally I do. Depends. It very much depends on the actual setup. Like here, once this candle had closed here, I was either waiting for it to continue shooting down or to see any hesitation pulling up. And literally the second that this candle opened, I'm going to guess that it had this tiniest little pull down before continuing straight back up, which is when I literally just clicked enter. Like I don't enter on candle closes. I do typically end up waiting for one candle to be printed, and as you can see here, I see candle printing that showing that's like hopefully going to continue bullish. So I was just waiting for one little other hint that it was going to continue going bullish before I enter.
And So you basically just also look at like the PDR rates from like premium to discount also,
Yeah, only
right?
higher time frame, because realistically, for entries like
Only
this,
higher time
well,
frame, yeah.
obviously
Mhm.
it is valid for lower time frame as well, as you can see here. But you typically see the
Yeah.
setups building liquidity like around zero point 0.5 zone anyway. So realistically, the only valid order blocks would be
Mhm.
beneath it anyway. That's the only reason why I don't reiterate it and stress it on the lower time frame, because it just always it always tends to be standard on the lower time frame, because obviously if it's building up
Yeah.
liquidity
It's
here,
because
like
it's also fractal too, right?
yeah,
Yeah.
yeah. Where's the entry in there? There's nothing there, so no point to stress
Mhm.
under zero point 0.5 if the only valid order blocks are beneath zero point 0.5 anyway.
Facts.
So you don't use no, I don't use higher time frames than 1 hour, but Luke does, like all the other traders do. Just stick to whatever feels best for you. This is what feels best for me. What works for me.
Wait,
I'm happy using that.
are you not Luke?
No, I'm not Luke.
Oh, Tommy. Oh, I thought it
Yes.
was the same account and it was you just wanted to use something.
No,
Oh,
no,
okay.
no. Luke will be going through all his stuff like very soon. I was just waiting for all the other questions to be done, and then he'll be back on. What's the lowest time frame do I use to find the zones? Literally just 1 minute. I use 1 hour for 1 hour for direction and bias. 15 minute for high time frame zones. 1 minute for 1 minute for change of characters or blah blah blah, whatever you want to call it, double breaks, whatever. And then I use the 1 minute for my entry, but sometimes I go to 5 minutes to find my order block for the entry. Big M, do you and Tommy both give calls in the premium? Yes, I will. Uh, in the new year, we're kind of merging a bit, and then I'll have a lot more activity in there. I still like send my setups and my analysis and that, but I'll have a lot more activity in there just after Christmas. 15
I have
to
a
1
question.
strat. Yeah, gone.
Is it easier to trade on MetaTrader?
For me, yeah, but to be fair, that's the only platform I've ever
It's
actually
the
tried to
only
trade on.
platform, yeah.
Yeah, like it's just such a normal thing for every forex trader that I haven't even tried to question it, to be honest.
Okay. Thank you.
Alright. 15 to 1 strat, right?
You
Similar
could
to
also
15
trade on
minute
trading
charge.
view.
You can do, but I don't like that, because you have to like place like it. I don't know. I just don't like it. I've never once again I've never tried it. I prefer to separate my analysis from my actual entries
Mhm.
and where all the money is.
And the phone is easier, bro. Like you said, it's just one button. Like look at trading view on your laptop. Boom, just press it and
Yeah,
that's it.
precisely. I have a little stand for my iPad. Like, it all makes sense. Why not? Can you go through the trade on 4th of
Bro, can you
December?
give some tips on like passing funded accounts and
Um,
like stuff like that?
well, when it comes to risk management, quite simply, a lot of people like to scale in risk 1% until you win. But I'm taking a 200k challenge at the moment. Where's Samuel? Samuel's still in
Yeah.
here. Samuel's taking a
Mhm.
400k. I think you might be able to agree with me on this one. Risk zero point 0.5 until you have a buffer, and a buffer pretty much means just enough to risk that you've already made. So say I risk 0.5%, I hit a trade of a 1 to 6 minimum or something like that. You've just made
Mhm.
3%. So then that is 3 trades risking 1% that you can afford to lose without being in any drawdown.
Yeah, I
So you're
agree.
risking profits.
Yeah, Samuel, do you do the same?
Ah, okay.
Yeah, I agree. I agree.
Mm.
I do zero point 0.4 because with commissions, if I lose and I've lost
Yeah,
zero
very
point
true.
0.5, it just makes more sense for me.
Very, very true.
But I agree with the buffer
But
thing.
yeah,
I say create a buffer and
Mhm.
then risk a little bit more. And if you lose, then just lower your risk back to where it originally was. But don't go lower than that unless you're like deep, like 8% drawdown.
Yeah. Luke, what do you think? Same thing here?
Yeah, I mean, I was saying the same thing to you the other day. I said
Okay.
when it comes to managing, the larger accounts, especially with funded, and having that kind of conscience of, it's not physically your account. Definitely dropping it down from being comfortable on a 1%. Definitely makes the world. When I first did the challenges and I was trading funded, um, I said to you the other day, zero point 0.5 kind of changed it for me a bit. It was risking 1%. And then back in then when I couldn't control my emotions as much, like 1% on 100k is 1,000. Say you lose 3 trades, that's 3,000, and your head's just fucked. If you're losing, 0.5, point 0.5, I just feel like you can manage everything a bit better.
Yeah, I agree. Wycone said you both have different trading styles. Do you think premium members will kind of have to choose one or the other? Well, when it comes to general teaching, is like teaching structure, teaching sort of not the actual entry, but speaking about entry models, me and Luke are like very similar on that. Obviously different pairs, but it's all roughly the exact same thing. Obviously we have different confluences in, like, I use quarterly theory, he doesn't, blah blah blah. But realistically, when it comes to the new year, and if you join the mentorship or whatever, then you can choose, you can switch between, you can take information from both and create your own strategy. You can do whatever you want. Like, it's not that different to the point that it will confuse anyone. But it will only be confusing for people if you religiously try and learn the same thing, learn both things at the exact same time. If you stick to one, then stick to the other, combine what you know, you'll be fine.
That's what I was gonna say.
Facts. I agree.
What else? Can you go through trade on 4th of December? Yeah, give me a minute. I'll answer the rest of the questions and I'll go through that trade. What made me choose my stop loss size? Quite literally just experiences. And I've been training for like 2 years now. I've been looking at GU for like over a year and a half now, simply strictly GU. And I've kind of just learnt that the natural entry for me felt like, as in like the, how can I explain this? The impulse that I've got from like this trade here, 2.5 pips, is like, I've kind of back tested and forward tested enough to know that that is enough for me to enter. So instead of it being like 1.2 pips, that's not enough, because that's like, that reaction will happen within a millisecond. Like, you won't even realize that's happened. But 2.5 it just works for me, because I know that realistically that could include one candle of reversal and then entering, which is kind of what I liked, because I would like it to print a candle before I enter. Obviously, depending on some reactions, I might enter on the candle or not, but 2.5 just kind of what felt right for me. Do you only trade GU? Yeah, I'm simply GU. Luke is EU and AU, but I'm simply only GU. Why do I trade GU of EU instead of EU or AU? Well, AU I find, for me personally, to work more in. Sorry, my boy, I'm muting you.
Please,
I'm
what
muting
is
up, I'm
this?
muting it. Oh no, it's fine. I trade GU over EU and AU because obviously I'm from London. Well, not obviously, but obviously I'm from the UK, and I find myself not having much GBP news in the morning compared to EU. You'll always have EU news in the morning. And AU I find to have more volume in New York session, but obviously I haven't like properly had a look at AU myself, so I can't really speak on that. Luke trades that in London session sometimes, but I've just found that GU fits my lifestyle better. And obviously GU's a lot more surrounded by liquidity sweeps and a lot more manipulation, which is kind of like my thing. I find that a lot easier than mitigation. I find it a lot easier to see liquidity sweeps than potential like constant mitigation.
I do still look at GU. I think like EU and AU are the ones that, especially EU. EU's the one I've been trading for like 3 years. So when it comes to session opens, I'm just going to put all of my focus into EU and AU. When it comes to GU, I'm always looking, because if there's like a higher time frame move that I know that you can see it kind of happening, like the narrative could be from the week before, looking for this type of move, etc., etc.
Yeah.
Then I'm always still looking, because the entry concepts are fairly similar. But yeah, in terms of EU and AU, they're the ones I'm watching for session open.
Yeah. Big M, what's your win rate? Well, I collect data like every trade, and I journal every single trade. And last time I checked, which was about 2 weeks ago, it was about 78%. And that's over 6 months. If you want my lifetime one, it's going to be a bit lower than that, because obviously I started off unprofitable. I trade Mondays, Luke does not. Luke, Throne asked, do you recommend start with EU because it provides most liquidity, or does GU suffice as well?
I think they're both. It's just, I think it's like, I don't know what the word is, but whenever I've been teaching, I've always said, the only pairs I would recommend trading is GU, EU, and AU.
Yeah.
I've got, every other pair I just wouldn't even bother. GBP, JPY can be good, but then again, I don't have years of experience trading that market. I have traded it and done well with it. But in terms of mastering and understanding exactly why price is doing certain things, that's why I suggest starting with GU, EU, and AU, because I can help you exactly and understand why the price has done what it is, and help kind of put that in front of you.
Yes, I agree. Yeah, Sam said just test both. I think obviously like Luke was saying as well, GU, EU, and AU are the best pairs to trade for forex. However, all three of them have, well, EU and AU are slightly similar, but I think GU compared to them two is like almost a different personality, and it depends on how you want to trade. Obviously, it depends on your strategy, but it depends how you are as a person as well, how you'd like prefer to trade. So obviously, just test them all, like see what feels best to you over like 6 months, then come back and you'll know. Like I knew instantly with GU, that's what I wanted to trade. Like when I found when like I was speaking to Luke like ages ago before I was profitable and all that stuff, like he would like teach people on EU. I'd be having a look at EU as well, and I was like, oh, it's nice and all that. And then I found GU and it just fit me within like 3 weeks to a month max. I was like, okay, this is like, I know this is it. It's very easy to test it out and find which suits you personally. Yeah, exactly. Got to collect data. Like, you never know. NZD CAD, like that could fit you the most. Like, who knows? You have to test them out.
No, definitely not that pair. You could have said any other pair, but that pair definitely not.
Rupee to the fucking pound. For G, from your experience, what time frame is best for looking for zone on this pair? 15 minute, like I said. For high time frame zone, 15 minutes simply. If I could trade one time frame, it'd be 15 minute. Because that's enough to know what's gonna happen for the like London session at least. That's what I believe anyway. Alright,
I agree.
if there's no other questions, Luke, you can go. You can preach your stuff.
Yeah, man.
Sweet.
I think this webinar I'm just going to focus on people that have got questions, because last week I didn't. Don't even think I took one trade last week. Nothing was suiting me. There was one trade that I did miss, which I can go over. But yeah, I'll go over this trade first, just to kind of explain things. And if anyone's got any questions, I'll take them after. So this was, I believe, what day was the 15th? So yeah, it was Friday, right? So as you can see, we're looking at the timing. This was London Open, right? So 7:30 around London session start. Here we have Sydney. So Sydney session isn't a session that you need to be focused on or looking at. However, it is the time of day where the algorithm resets. So if you're trading Asia session, you'll find the majority of the time price will raid both sides, pushing into APY. So that's what happened. As you can see, price tapped into the previous low, raiding the liquidity because this order block had already been mitigated. So price had done that, run up, sweeping the buy side liquidity, pushing into a high time frame POI, and then inside of that POI is then when we started to look and drop down the time frames for the exact entry point. If I jump down to the 5 minute, if you're watching in the morning, obviously this is quite early for all of the UK traders. Taps into the POI at 4:40, and then we get that shift, and then sticking back onto the 15 minute, looking at the higher time frame, where's our liquidity, right? The narrative, like what someone else said, how me and Tommy trade, it's all around the same concept, right? You've got to build a narrative. There's got to be a story, because once you've got the narrative and the market's intention, then you start looking for the exact entry. Entry and narrative have got very different things, right? Narrative is basically your bias. Can anyone else see a green screen? What's up with the constant joins and leavings? Has anyone else got a problem with seeing my screen?
I'm recording it as well, so if anyone can't see it and their Wi-Fi's not loading it, then you can always just check it up on YouTube.
Okay, cool. Right, so this is our first point of liquidity, right? So before the entry, if there's no liquidity, that's where you're going to find the manipulation. That's the massive problem that the majority of traders are making. If you've got no liquidity, price will potentially push into a zone it will push into it for definite, and sometimes it'll have a reaction. And then when people see these reactions, they've got that fear of missing a trade and they'll enter. So what I mean by manipulation is if we drop down and look into this order block, right? If I highlight that and jump down to the 1 minute, as you can see, there's a manipulation around this zone. You can see the price was trying to sell. So that there is manipulation, right? It's manipulating people to start selling because the impulsive, the impatient people are trying to get in with the fear of they're going to miss out. So we've just simply following that main rule, which is one of the rules I say. So you need the intention, liquidity, and then you need your POI, right? So liquidity comes before your whole entire entry criteria, right? So back on the 15 minute. Now we've found our intention. So if we're opening our laptops and our charts at 7 o'clock, what's our intention? The intention straight away is before seeing any type of entry, we're going to want to see the previous liquidity, the previous lower high to get swept. So we're not going to be even looking at price until it breaks above this zone. It could just be a wick, it could be a candle close. It doesn't matter at this point. If it's a candle close, doesn't matter because it's staying within the range, right? The range is from the high to the low. If it was to close above this high, then that'd be invalid for me. If it was just wick, if it was the wick above, then it's a liquidity sweep. Everything is still valid for me, right? So moving on from that, seeing our price push into that liquidity, tapping into the 15-minute order block, then straight away, what I'd be doing is jumping straight down to the 1 minute for the exact point of entry, right? Like Tommy says, with entries like this, liquidity inducement and stuff like that, with price stalling just before, I'm not going to be waiting for the shift, because if you think you're waiting for a shift at London Open, this must have been news as well, but just for example, if you're waiting for that shift, you're waiting for price to come beneath this, waiting for a new bit of liquidity, break, and then a pullback sweeping liquidity, especially after price stalling, taking a lot of liquidity, generating a lot of liquidity, because price stalling is, liquidity engineering, then you're going to be missing your trade. But there's 3 different trading concepts when it comes to entries, which I'm not going to touch base on today. But I can explain eventually how to determine what type of entry you're going to be looking for. So all I would have been looking for here is straight away, any point could have been here, 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 here. Any point of rejection, reaction would have been entering. So I see price stall here. We started to react, push back up, maybe sweeping more liquidity, just doing whatever it needed to do. And then seeing that huge impulse candle, not huge, but the first downward candle was, quite strong. Simply enter, stops just above, giving some type of room, right? It is, don't get me wrong, it is still an aggressive entry, right? But that's the power of having a high risk to reward. If we had a high risk to reward there, let's say if we entered here, right, with our stops just above, I'll look now quickly at the targets. 1 hour, where are we? So on the 1 hour, where's our first point of liquidity? Our first point of liquidity is this previous low. It had already mitigated this order block. So you could potentially, within the next week, see price push even further down here, filling this imbalance. Anyway, let's say that the target was at the first point of liquidity, dropping back down. I hate this mouse. Dropping back down, that's a 1 to 30. So that is like a trade that potentially you'll see once a month or once every 2 months. They're not trades you get every single time, but with an opportunity like that, you can take that risk of, if it does come back up and hit stop loss, you have still got quite a lot of room for price to be moving up into and potentially accumulating before distributing, right? Is it what I can hear on the background? How come you didn't enter? How come you didn't enter? Because simply I just wasn't on the chart then, or wasn't trading. Has anyone got any questions regarding that example? If there is a perfect setup, but there are news in like 15 minutes, we're just going to ignore it. Yeah, definitely, because well, it depends what type of news it is. If it's high impact, then yeah, 100%. Medium, like, so if you're on Forex Factory and your files are orange, I'll show you. So if you've got, I haven't even got any here, but so this is high impact, low impact. Low impact, yeah, completely just ignore it. Doesn't really matter because there's going to be low impact all the time. But high impact, 100% stay away, because even if you're following the trend, you know, news is probably just going to liquidate people and still continue your trend. But you can never, well, you can, but it's hard to predict where price is going to liquidate to. So, say for instance, you entered here. Here, news didn't liquidate anyone; it just straight away impulse. Whereas majority of high impact, sorry, like CPI, NFP, and a few others, you would have
Wait,
potentially seen price push up. Could have been here, could have been here, could have been here, could have been here, could have been anywhere, sweeping people out to then melt. So when it comes to news, I would just say, yeah, 100% stay away.
it did that right before it went up last week or something.
Yeah, that was CPR, I'm pretty sure.
No, FOMC did it. FOMC.
Yeah, that's the one. So,
Yeah.
what's the Sydney times you have marked out? So it's 10 p.m. to 12 a.m. UK time.
Yo, bro, Luke, I have a
Yo,
question, brother. So you know how you said Sydney resets the algorithm?
yep.
What do you mean by resets the algorithm? Because at 12 a.m. midnight is when we have the true day open, right? Doesn't that reset the algorithm for the daily candles, or
Yeah, so
what do
exactly.
you
So
mean
that's
by
when the
like?
whole session finishes, right? So what I
Mhm,
mean, so it's just basically, instead of saying it's the algorithm resetting, even if you look, like, price is just, it's basically like someone's turned on the bank's on button and off button, right? So it's basically just the
mhm.
time, like you said, the daily cycle resets. But Sydney being 10 p.m. to 12 a.m., that is just that whole time frame where price is algorithms resetting. Sorry.
Oh, oh, because I don't have Sydney on my chart. So basically, when Sydney finishes, that's when the daily candle opens. Is that what you're saying? At
Yeah,
midnight,
pretty much.
12
So
a.m.
the next daily
Okay,
candle
okay,
will
okay.
open at 12 a.m., right? I haven't got Sydney marked up.
Mhm,
I literally just simply drew this for the type of example I was sending into the Discord. I never look at it, but because this was accumulating, this whole concept was quite high time frame. You know, for the majority of
mhm.
the traders who are from, you know, Australia, America, Europe, whatever, all different time frames, I did mark out Sydney just purely on the fact that I wanted to explain, you know, for the US people that, you know, are trading Asia more than us, it's very easy to trade Asia using Sydney.
Yeah, yeah, makes sense. Okay, thank you, bro.
No worries. Um, does it make sense to look for setups even like 1 or maybe even 2 hours after market open, or only open? Yeah, so that's probably something Tommy can answer a bit more. In terms of the quarterly theory, having different times inside sessions where you can find volume. Um, but purely how I've been trading at the moment, I'm looking for a trade between either 6:30 and 7:30. No, I wouldn't even say that. I'd say 6:30, so maybe 7:15 as a different concept, and then another concept is from 7:30 to maybe 8:15.
Yeah.
After that, I won't be trading potentially. If I see, I wouldn't be trading for a day. But sometimes I'll potentially see a nice opportunity around 10. And if I do, then I will be entering.
It very much depends for me as well, because obviously quarterly, I use quarterly theory to essentially tell which quarter will be like which 90-minute cycle will be swept, which allows me to like know like if it's AMDX, or it could be like accumulating in the second quarter before manipulating in the third quarter or something like that. But I only use quarterly theory to find what time my entries will be. So I will typically only be on the market from about 7 a.m. to max 11 a.m. But like Friday's trades, I was in the call with Luke when I was explaining this to him as well. On Friday it was pretty rare because we saw the accumulation in quarter 3. So then we saw the manipulation in quarter 4, and then the distribution where the entry was in quarter 5. Quarter 5 doesn't technically exist, but it's just after the last quarter, so that entry was like just before 12. But realistically, I usually wouldn't be on the market at that time. But I have a lot of time in life at the moment, so I can afford to sit on there for another 45 minutes. But obviously, that's something we'd go more detail in, not in free calls, obviously.
Before I enter a trade, should I always wait for liquidity sweep? Yeah, 100%. It's probably the most simple free tip anyone can give. And if someone gave it to me 4 years ago, I would have probably been profitable within a month. If you do not wait for liquidity, you're going to be getting, well, there's different concepts. If you're, trading a continuation inside of a huge impulse, there are certain cases when you don't need to, but they're the trades that you don't want to be chasing, because if you're chasing these trades that 10% of the time don't have liquidity but still hit take profit, what's the point of taking that? Because then it means your win rate's going to be 10%. You know what I mean? So as stupid as that sounds, that example, just stick to higher probable entries. So what's more probable? Entry after a liquidity sweep or before? Going to be after. So just, yeah, it's one thing to keep in mind. And that's what I see still with a couple of students when they're posting their charts. They don't understand. They understand it, they know it, and they've shown me to prove it. And some of their examples are amazing. And then one of them will be like able to quickly see there was no liquidity there, and then instantly they're like, "Oh shit, yeah!" And that's literally the only answer to why it didn't go well. Also, so if you see a setup in London Open, you just leave the charts for the day. So if I see an opportunity in London and I take it, whether or not it hits stop loss or a take profit, it doesn't matter regarding whether or not I'm going to trade New York. I'll probably trade New York maybe 2 or 3 times in a month, and maybe not even that. Some months probably never. It's not because I don't like it. It's just purely because I'm so used to doing things in the morning with trading. I would rather just know, if I can do my stuff in the morning, I'm a busy man. I do a lot of stuff, so I want to know that I've either made my money or I've done my bit within trading in the morning. So now I can focus on creating content, just being productive in any other way. There's no point in me trading New York. Sometimes I do, yeah, if there's something that's nice or I'm feeling it. But in terms of what I do and don't, I usually just stick to London Open. But that's just purely out of my opinion, my lifestyle. I want to be done with trading in the morning so I can focus on other stuff for the rest of the day. Yeah, no specific reason at all. You can get more volume in London just because it is the start of the day, for me. But with New York, there is other concepts, other daily cycles to be taken into account. London, New York crossover. You can get reversals. There's a lot of stuff to take into account when it comes to New York.
Bro, for me, I'm in Canada, so I trade New York mostly.
Yep.
And it's very beneficial for me because I could see London's price action and how London creates the higher the low over the day. So it's just like for me, it's just really helpful because I also swing, right?
Yeah, 100%. That's what I was trying to say. That like when it comes to New York, you want to get to know about the daily cycle. Otherwise, sometimes New York can be a bit confusing and find yourself being manipulated a lot of the time. Do you use the concept of consolidation, expansion, retracement? Yeah, so that is basically the AMD cycle, so accumulation, manipulation, distribution, right? So it's not something that is my only trading plan. So every single trade I'm going to be waiting for accumulation, manipulation, and distribution. It's just one of those entry concepts that we use. But it all depends what time of the day. So there's loads of different concepts, but there's got to be things that stand out for you to then be able to identify which kind of concept. So if it's a liquidity inducement concept, I'm not going to be using AMD. If it's a reversal, then majority of the time I'll probably be looking out for AMD, especially on the higher time frame. Anyway, could you break down a blank chart looking from the market attention starting from the higher time frame? Yeah, of course. So that's what I pretty much did with this trade. But so I'm just going to show you, my preference, what I'm trying to do, right? So when finding the market intention, I'm not looking for the market intention for, let's say the next whole entire day or for the following week. When I'm coming on at 6:30, 7, I'm only trying to look for the market's intention for the next 2-3 hours. What am I going to expect to see happen in London? So when we get this volume kick in, what am I going to predict to happen, right? I'm not going to trade what I want to see. It's just what does the market need to do? So when you get the days that are a bit choppy and boring, and it's hard to find the intention, then I'm not going to be trading. I'll simply put my hands down and I'm closing my laptop. If I haven't got confidence in the intention, then what's the point of me taking a silly loss? You know what I mean? So when it comes to finding the intention, going to be hard to show. Let me look at Thursday. No, actually, I'm going to look at Wednesday. So here in the market, right? I need to drop down. So on the 1 hour, right? So London Open, let's look at from 6, 7 o'clock. So 6, 7 o'clock here, right? Let me jump on the floor. All I'm looking for, right, is simply the candles. The candles is what's going to indicate to me what price is doing, right? So just simply seeing straight away on the 4 hour, we're seeing a huge impulse to the upside, and then prices, quite clearly impulsed the retracement backwards. There's a massive wick. So seeing price pull down that quick, we're gonna find price correct itself, right? So by correcting itself, it's just gonna build its way back up to that wick. So following the 4 hour candles, you can see price is corrected. It's filled them wicks up here. So this is an FU wick. So an FU wick is basically a fuck you candle to the market, right? It's massive liquidation. So within this 4 hour candle, we're going to be trading London, right? So straight away, I'm probably going to be jumping down to the 15-minute. Shit, where was I? I think I actually traded this day. So straight away then, jumping down to the 15-minute, we can see the market's intention, right? All of these lows have mitigated previous order blocks. So this low mitigated this order block, right? And so on and so on. All of these are mitigated order blocks. So the first point of liquidity, even though every single low here is a type of liquidity, there's no point in me having 16 different lines going across my screen. So the first point of liquidity, which is the level that, should be broken, should be swept, right, is going to be this candle, right? So with that is now our intention. So we want to see price come down to this level. I'm going to jump down the time frame. So following price, right? 6 o'clock, as you can see, price has retraced back to the upside. As you can see, it swept the liquidity, which is why price had the strength to continue to the downside. So that's our sweep tapping into our order block. As you can see, it just tapped. It's still completely valid. Doesn't matter how much the order block gets filled, it's still tapped, so it's valid. So if you were up at 6 o'clock, then that's a completely valid trade for you to take. As you can see here, there is no internal liquidity. External liquidity, sorry. So this is our external leg. This is our internal leg. As you can see, from the low of the external, there is no liquidity inside of this leg, which is why I waited for the previous high to get rated. When there's no liquidity, even though price is following the same trend, which is the difference between a breaker structure and a liquidity sweep, which I can go into if needed. As you can see, it liquidated the higher, right? So because it wicked through above, that's still completely valid. That doesn't mean that this trade is now invalid, right? Seeing price break above, I still know that this is still valid for sales, right? So what we're going to wait for? We're going to wait for that shift in this case, down to the 1 minute. as you can see, we've got our shift, we've got our liquidity, and then it moved. It's tapped into that IFC candle, right? Tommy calls it IFC. I think, I don't really know, there's different names, but I've always called it an IFC candle. So the IFC candle is the candle in between the order block and the first trending candle, right? So with the entries, like I stated earlier, with the reactions, just simply waited for price to retrace, show some type of hesitation, enter, and then I can't remember where my targets were. If we jump down to the 5 minute, I might we'll find the entry. Take profit, sorry. No, I can't even tell you. Anyway, that's the whole reasoning behind that entry. Just reading the comments. Hold on, boys. That big imbalance, why weren't we expecting price to come lower to a demand? So with huge impulse legs, right? So this is the trend, right? This is the market's intention to come to the upside. When it's like this on the higher time frame, the chances of it coming down to a little demand order block down here isn't as valid, right? So, you know, the probability of it just tapping into this imbalance, accumulating, maybe we see an AMD cycle here, is probably going to be more likely. So I'm just going to simply wait on the 5 or the 15 for some type of shift or indication that price is about a flip, sorry. This was on the, if this was like a 5 minute price action, then potentially it would be different. But because we're on the 4 hour, I'm just going to be looking at the imbalance. Look, if we have a look at the 4 hour demand, right? Well, it has already been mitigated, but you know, I'm not going to be drawing that across, am I? Why did you wait for it to come to that supply and not enter off the liquidity sweep after I don't know what that says. Where are we? Hold on a minute, I'm trying to find this bloody trade. Because this lower high had already mitigated this range. So that range is no longer valid for an entry, whereas this IFC candle hadn't been mitigated, so that was the only valid POI. That's what he teaches because it's safe entry. So on the 1 minute, it's enough to wait for a tap of the supply and demand. Yeah, exactly. His entries is basically the turtle soup model for UICT minded traders. Right, has anyone got any more questions? Nobody's got any more questions. I might get the video stopped and I will be uploading the video tomorrow for everyone.